Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cannabis sector. So it finished the week with a really good bounce, so we're going to look at the top big board plays. So the first stock up is Canopy Growth, ticker symbol CGC. You can see here it closed above 30 on RSI and above 20 on Fasto, so it's heating up. If you look down here, this is the daily chart. You can see the green dots here are now below the candles. So it had a bullish PSR bull flip, which is good. It signals a possible start of a new uptrend. There was a close above EMA 4, that's the pink line here on Friday, and then it got above EMA 8 here at 1163 on Friday. And so those are the two levels to hold. To make it easy, if it drops below 11, it's going to signal downside risk. Okay, if 11 holds, what it needs to do is break this gap here from 2 weeks ago. And if it can break above 1250 and EMA 13 at 1277, the top of the gap's at 13. So it could hit some resistance in that zone. If it did close above the top of the gap and above EMA 13, it could possibly run up to the second gap, which is all the way up to 1450 and the middle Bollinger Band at 1492. So yeah, so it's going to be bullish if it can hold support here, but if it drops below 11, it will signal downside risk. If you look here, there was a bullish crossover on the MACD 8, 13, and 5. If you look at CGC here on the 15-minute chart, you can see it came up and it hit the blue line, which is the 300 simple moving average, currently at 1227. And so that's going to be the key level to break. You can see it came up, hit that level, that was the high of the day, and then it failed to break it. It did close below the middle Bollinger Band at 1199. So it's going to have to get above 12 and 1227 to head higher. If those levels remain resistant, it could come down, test this 50 SMA at 1149. So 1150 is going to be a real key level to hold. Okay, let's take a look at Cronus Group. Actually, Cronus Group has the best looking chart technically of the big plays, because it's actually trying to start a new uptrend. Now it needs to get above 50 on RSI and above back above 80 on Fasto. You know, it pulled back below. As long as it stays between 50 and 80, though, it is in the bull zone. You can see here the minus DI, the red line crossing over ADX. That signaled the bears were cooling down. So it'll be bullish if the green line gets above the red line. And so you know, to track back, it did close above the middle Bollinger Band. That's the dotted purple line there at 569. It's also the 20-day simple moving average on this chart, and it had closed above it twice last week, but notice this long upper wick on Friday. They sold it off and they pulled it back. So you know, for next week, it's gonna have to be above the middle Bollinger Band at 569. Now, if it drops below, and it did close below EMA's 4, 8, and 13 over here, that's gonna signal downside risk. So you don't want to see, you know, Cronus Group below 561. That's gonna be a red flag. So it's in a really tight situation here. It's at a flex point. You know, it's gonna be bullish above 569. I know it's really tight here, and bearish below 561. So it's a really tight playing field. We'll see if it can get a new uptrend going. Okay, let's look at TLRY here. TLRY ended up closing down 5% on Friday after it had already, you know, it made a really nice move and then they sold it off. It needs to get above 30 over here on RSI. RSI is still at oversold, and Fasto is still at oversold. You do have minus DI here coming down fast, and then you can see here on the parabolic SAR, that's the green dots, you can see high of day almost hit it. Once the share price hits that level, then the green dots will flip below the candles, and that signals the possible start of an uptrend. You can see it came up and it tried to fill the first gap here. It you know, came close to filling it, but it did not fill. It got into the gap and pulled back. It's really going to be all about getting above 5. I mean, it's going to have to get above the EMA 8 there at 465 as well. But this, like, 5's a big level, and then to get up to 6, that would fill the gap, and then to keep the run going, it would have to get above 663. That's EMA 13. Now you're going to know that it's pulling back and there's more consolidation if it drops below EMA 4 at 362. You can see the giant volume spike. So they did use that run up to 550 to dump some shares there. As you can see here, there's a gap between the two candles. It did fill the first gap, and it's trying to fill the second gap. Okay, let's look at APHA here. So it did close above the 30 on RSI and 20 on Fasto. So the chart's heating up. You got the, that's bullish right there with the minus DI below ADX. It had the parabolic SAR bull flip on Thursday. So the chart's really heating up. On Thursday, when it closed above EMA4, that was your clue. It's heating up. And then it got above EMA 8 at 244. So it's going to need those hold those two levels. Get below 237, that's going to signal downside risk. Now to the upside, if it can close next week above EMA 13 at 264, that's going to be very bullish. You can see there hasn't been a close above EMA 13 since way back here, the day before it dropped back on the, 23rd of January. So there hasn't been a close above EMA 13. So once you see they let that happen, that's going to be a very bullish change in trend. Fail to do that, that's going to be the top of the bounce, and it could come back down there and drop below EMA 4. You can see it did start the crossover on 813 and 5 MACD. Okay, and then finally let's look at ACB. Can't believe it's all the way down here at 73 cents. They might end up doing a reverse split on you if it can't get above $1 for 10 consecutive trading days. Usually they give them a few months to let that all play out, but yeah, you have to always keep in mind when you get below you get down to these levels, it is at a risk of a reverse split, and that could really crush you if you held through it. So here we are down here, and it closed on Friday above EMA 4 at 70. So if you're trying to play the bounce, that's the stop loss level. If it drops below 70, that's going to signal downside risk. It's going to have to get above EMA 8 at 77. You can see it traded above that level intraday, but it pulled back. The last closes above EMA 8 were back here in February, the third week of February there. So it's going to have to break 77 and hold 70 to head higher. It did just about fill this gap right here, and so on a move above 77, it's going to have to get above the top of the gap, which is 85, and then above EMA 13 at 88. Okay, so it's a good time for the cannabis sector. Lots of, they had in Canada, lying down the road, so finally they're getting rid of some of that oversupply, because that's been the big issue in the industry, and they have done a lot of scaling back. So we'll see here if that's enough to get the cannabis sector running, or if this is just a dead cat bounce. All right, thanks for viewing this video. If you'd like to learn more about charts and technical analysis and get more updated on these plays, please come check out the chat. It's the mychartcoach.com Discord chat, and go into welcome and say hi, and I will and we'll get you into the premium room. Okay, thank you so much.